Hey friends, welcome back. Today we need to have a very honest and very important conversation because my inbox has been completely flooded with the same question over and over again. People keep asking me, is the housing market finally going to crash in 2026? Should I wait? Should I hold off? Should I just give up for now and hope prices come down? And I understand exactly why you're asking this. If you've been trying to buy a home, especially over the last few years, it feels impossible. Prices are high, mortgage rates are still painful, wages haven't kept up, and every month it feels like the dream of owning a home moves a little further away. So today, I want to slow things down and walk through what's actually happening in the housing market, not based on headlines, not based on wishful thinking, and not based on fear driven predictions, but based on real data, real trends, and real economic forces that are shaping what 2026 is likely to look like. Some of what I'm going to say may be frustrating to hear. Some of it may even be disappointing. But my goal here is not to tell you what you want to hear. My goal is to tell you the truth, because the truth is what helps you make smarter decisions for your future. Now, before we go any further, let me be clear about something. I am not a financial advisor. I'm not here to tell you exactly what you should do with your money. What I do is research. I study the numbers. I read reports from housing economists. I follow Federal Reserve data. And most importantly, I listen to people like you who are living this reality every single day. This isn't guesswork. This isn't speculation. This is about connecting the dots and understanding where things are headed. Let's start with the big question everyone is asking. Is the housing market crashing? When people talk about a crash, what they usually mean is a massive drop in home prices, something like 20, 30, or even 40%. That's what happened in 2008, and a lot of people are hoping we'll see something similar again so prices finally become affordable. But when you look at the most recent housing data, that's simply not what we're seeing. National home prices have not collapsed. In fact, on a year-over-year basis, prices are still slightly higher than they were last year. Not by a lot, but they are higher. And that alone tells us something important. A market that is still rising, even slowly, is not a market that is crashing. Now, it's true that real estate is local. Some areas have seen price declines. Certain parts of the South and some Western markets have cooled off. But when you zoom out and look at the country as a whole, the majority of metro areas are still seeing stable or rising prices. That matters because housing crashes don't happen in isolated pockets. They happen when the entire system breaks down. And right now, the system is stressed, but it is not breaking. Now, let's talk about affordability because this is where the real pain is. The median home price in the United States is still well over $400,000. For a household earning around $75,000 a year, that price point is simply out of reach for most people, especially when you factor in today's mortgage rates. This is why first-time homebuyers are being squeezed out. Their share of the market has dropped to historic lows. People are buying their first home later and later in life. What used to happen in your late 20s or early 30s is now happening closer to 40. And that's not because people are lazy or irresponsible. It's because the math doesn't work anymore. Housing costs have exploded, but wages have not kept up. That gap is the core of this entire crisis. Now, here's where things get even more complicated. And this is critical for understanding what 2026 might look like. A lot of people assume that lower interest rates will fix everything. The Federal Reserve has already started cutting rates, and many people are hoping that once mortgage rates drop, affordability will magically improve. But here's the problem. When interest rates fall, demand increases. More people can qualify for loans. More people rush into the market. And when demand rises faster than supply, prices go up. This is basic supply and demand, and it's one of the reasons lower rates don't always help buyers as much as they think they will. On top of that, the Federal Reserve has been expanding the money supply. That means more dollars in the system, and when you create more money, the value of each dollar goes down. That's inflation. Inflation doesn't just affect groceries or gas, it affects assets too. Homes are assets, and historically, assets rise in value when the money supply grows. This is why prices have stayed high even as affordability has collapsed. So, when people ask me, is a housing crash coming in 2026? My honest answer, based on the data so far, is no. I do not see the conditions that typically lead to a crash. What I see instead is a continuation of high prices and strained affordability. And I know that's not what many people want to hear, but here's the good news. Understanding reality gives you power. And in the next part of this video, I'm going to break down what this actually means for you, what experts are projecting for mortgage rates, why builders aren't saving the market, and most importantly, what practical steps you can take if you're trying to buy, waiting, or just feeling stuck. Let's pick up where we left off because this is where things get very real and very practical. We've talked about why a housing crash is unlikely in 2026, but that raises a painful question. If prices aren't crashing and affordability is still terrible, what are people supposed to do? To answer that, we need to talk about mortgage rates, housing supply, and the reality most families are facing right now. Mortgage rates have come down from their peak, but they are still historically high compared to what many people got used to a few years ago. Rates in the 6% range may sound normal on paper, but when you combine those rates with today's prices, monthly payments become overwhelming. Many housing economists are now projecting that mortgage rates will stay roughly in this range throughout 2026. Not skyrocketing, but not collapsing either. That means waiting for dramatically cheaper financing may not pay off. Now let's address another common question. Why don't builders just build more homes? In theory, increasing supply would help bring prices down. But in reality, building homes has become far more expensive. Materials cost more, labor costs more, financing costs more, and regulations add even more expense. Builders are stuck in a tough position. If they build affordable homes, their profit margins shrink. If they build higher-end homes, fewer people can afford them. So construction continues, but not at the scale needed to solve the shortage. This is why the housing shortage persists year after year. So, where does that leave you? First, if you are waiting for a massive crash before you make a move, you may be waiting a very long time. That doesn't mean you should rush into a bad decision, but it does mean you need to be realistic about what you're waiting for. Second, focus on what you can control. You can't control the Federal Reserve. You can't control housing prices, but you can control your credit, your savings, and your strategy. Improving your credit score can make a real difference in your mortgage rate. Saving even small amounts consistently adds up over time. Paying down high-interest debt gives you more flexibility. Third, look into assistance programs. Many people don't realize how many options exist at the state and local level. There are low down payment loans, there are grants, there are programs designed specifically for first-time buyers. Fourth, flexibility matters more than ever. You may not be able to buy your dream home in your dream neighborhood right now, but that doesn't mean homeownership is impossible. Condos, townhomes, smaller properties, or different regions can offer stepping stones instead of dead ends. And finally, stay informed. Markets change, policies change, opportunities come and go. The people who succeed are not the ones who panic or give up. They're the ones who adapt. I know this housing market feels unfair, and in many ways it is, but understanding how it works puts you in a stronger position than most people. If there's one message I want you to take away from this, it's this. Don't make decisions based on fear or hope alone. Make them based on reality, preparation, and a long-term plan. You're not failing. The system is difficult, and millions of people are facing the same struggle. If this helped you understand what's really happening, make sure to stay tuned for future updates. I break these issues down in plain language so you can make informed decisions, not emotional ones, and I'd love to hear from you. Are you trying to buy? Are you waiting? Or have you decided to take a different path for now? Drop a comment and share your story. You're not alone in this, and your experience may help someone else feel a little less alone too. Thanks for watching, and I'll see you in the next.